Hello everyone, welcome to EduTap and welcome to today's Finance 360-degree session in which we are going to cover a very important master action that the RBI has recently released. Okay, so what is this master action all about and what scheme the RBI has discussed in this master action? So all of this we are going to discuss in this session, but before that do tell me that I am clearly audible and visible or not. Okay, so do tell me if my voice is absolutely clear. And in today's session we are going to discuss a very important master direction. Okay, so this master direction is regarding the currency. So this master direction is regarding the currency distribution and exchange scheme. Okay, so this scheme we are going to discuss in today's session, and this scheme is of the RBI under the clean note policy. So we are going to discuss the details about this scheme, that why it was launched, as well as what are the incentives given under this scheme. All of this we are going to discuss in today's session. But before moving forward with the session, do subscribe to the YouTube channel of EduTap so that you continue getting these relevant videos, and do join our Telegram channel, because in the Telegram channel you will get the PDF of the session. Okay, so just give me a second. Okay, so in the Telegram channel you will get the PDF of the session. Okay, so in the Telegram channel you will get the PDF of the session. So do join the Telegram channel and do download the PDF, and the link for the Telegram channel is provided in the description box below. So let's start with the scheme now, and let's start with the master action, that what the master action has said. So first of all, the currency distribution and exchange scheme, this is for the bank branches. Okay, so this is the scheme. This is the scheme for the bank branches. This is the scheme for the banks, including the currency chest. So we will discuss that what are the currency chest and all, but this is the scheme of the RBI for the bank branches, including the currency chest. This has been formulated. So this was first notified in May 2016. So this was first notified in May 2016, and in May 2016 the incentives were determined that okay, for the different things, what are the different incentives that will be given to the banks. We will discuss that what are the different areas for which the incentives are given. But this is the currency distribution and exchange scheme. This is the scheme of the RBI. This is for the bank branches, that was first released, that was first launched in May 2016, and under this scheme there are the incentives that are provided to the bank branches. Okay, now this has been formulated in order to ensure that all the bank branches, they provide better customer service to members of the public, with regard to the exchange of notes and coins. As you know that the RBI is following the clean note policy. The RBI is following the clean note policy. That means the RBI wants that the members of the public, or the public, should have the clean notes, should not have the soiled notes, should not have the torn out notes, should not have the bad notes, we can say. So RBI wants that all the people should have the clean proper notes. Okay, so that is the clean note policy. So under the clean note policy, RBI wants that the members of public, they should exchange their bad notes, their soiled notes with the banks. Now why the banks will be happy to take the soiled notes, why the banks will be happy to or joyous to take the bad notes from the public? Because the bank branches, they can exchange their bad notes with the RBI, and they can also get some incentive for exchanging the soiled notes. Okay, so this is the idea. So under the currency distribution, so that the public can get better customer service from the bank branches in terms of currency, for exchange of notes and coins, in keeping with the objective of clean note policy of the RBI. Okay, so basically in this master action, it has been written that in terms of the preamble to the RBI Act of 1934, so as per the preamble of the Reserve Bank of India Act of 1934, and as per section 45 of the RBI Act of 1934 and section 35A of the Banking Regulation Act of 1949, the Reserve Bank of India has issued the guidelines or instructions for realizing the objective of clean note policy. So RBI has again and again released different guidelines and instructions for continuing with the clean note policy, or for achieving the clean note policy. Okay, as part of the currency management. So this clean note policy, this is a part of currency management because the RBI is the one that is issuing the banknotes, or the RBI is the one that is regulating the money supply in the economy. And currency management comes under the regulation of the Reserve Bank of India. So under the currency management, the RBI wants, and RBI is working on the clean note policy, okay. With a view to furthering these objectives of the clean note policy and the currency management, the RBI has formulated a framework of incentives under the currency distribution and exchange scheme. So under this scheme, there are the incentives, the framework of incentive that was launched by the RBI. So under this scheme, that is the currency distribution and exchange scheme, there are the incentives that are provided to the bank branches, okay. So this scheme, it lays down the framework for the provision of incentives to the bank branches, so that the bank branches are working for the clean note policy, so that the bank branches are happy to take the bad notes, so that the bank branches, they are happy to take the soiled notes, because the bank branches can then exchange these soiled notes with the RBI, and the RBI also provides incentives, okay, through the currency chest, that we are going to understand that how this process happens, okay. But this is the basic idea, this is to encourage. So with a view to furthering these objectives of the clean note policy, the RBI has formulated a framework of incentive titled Currency Distribution and Exchange Scheme to encourage all the bank branches to provide better customer service to the member of the public in terms of currency notes. Any confusion in this? Do you understand the basic agenda of the scheme? This is the very important scheme. Do you understand the agenda? Is there a lag? Is this clear? Anyone? Any problem? Is this all clear? Okay. Now, what is the clean note policy? First of all, it is a policy adopted by the RBI to ensure availability of good quality of banknotes to the members of the public, because the banknotes, they are issued or they are under the supervision of the Reserve Bank of India, okay. Last point. Basically, incentives are provided. There is the framework of incentive. So incentive is provided under this scheme. So under this scheme, there is a framework that has been laid down for providing the incentive to the bank branches, so that the bank branches, they are encouraged, because if the bank branches are getting the incentive, they will be encouraged to provide better customer service to their customers in regards to the currency, okay. So this is the idea. Now, clean note policy, it is a policy adopted by the RBI to ensure availability of good quality of banknotes to the members of the public. So if the public has any soiled notes, any bad notes, so that can be exchanged with the bank branches, and the RBI wants more good quality of banknotes to circulate in the economy, okay. Now, what is the currency chest? Now, before moving forward, we need to understand the currency chest, then only you will be able to understand the further things, okay. So to facilitate the distribution of banknotes and rupee coins, the Reserve Bank has authorized select scheduled commercial banks or scheduled banks to establish currency chest. Try to understand that in your house, let's say there is a tijori, or there is a place that you keep the money, okay. So here you are keeping your money, your jewelry and such. Now the grandparents, the parents, the father, the mother, the children, if they want the money, so they have to take the money out of this tijori, from this chest, we can say. So in your house also, there is a almirah in which there is a chest, there is a tijori kind of thing, from which the mother or the father gives out money to the different members of the family, right? So similarly, from where the bank branches are getting the money, there are hundreds and thousands of bank branches in the country. So are they all going to RBI that give us money, give us money, give us money? No, the RBI does not give money to each and every bank branch individually. So there are some currency chest. So there are some bank branches, there are certain bank branches, or there are certain banks that are specifically chosen, and certain bank branches that are specifically chosen to become the currency chest, Like you have a tijori in your house, there is a currency chest in an area. From this currency chest, there are different other bank branches that are the non-currency chest bank branches that do not have the currency chest. So they receive the money. They receive the money from this currency chest. So there are certain bank branches that are authorized by the Reserve Bank of India to become the currency chest, and the RBI provides the banknotes to this currency chest, and from this currency chest, the other bank branches that are the currency chest bank branches, they can get the money from the currency chest from a bank branch. Okay, so to facilitate the distribution of banknotes and rupee coins, the Reserve Bank has authorized select scheduled banks to establish currency chest. It is like a tijori that a bank branch is keeping. Through that tijori, through that currency chest, the other bank branches that do not have certain kind of tijori, they can get the money. Okay, these are storehouses where banknotes and rupee coins are stocked on behalf of the Reserve Bank. So on behalf of the Reserve Bank, this bank branch are keeping the currency chest, and the RBI provides the banknotes to this currency chest, and from this currency chest, the money is further circulated to the other bank branches. Okay, so this is the idea. For distribution to bank branches in their area of operation. As of February 28, 2025, this is the most recent data, there are 2,691 currency chests in our country. The currency chests are expected to distribute the banknotes and rupee coins to other bank branches in their area of operation, which these bank branches that do not have the currency chest. So these bank branches X, Y, Z, A, B, C. So these bank branches that do not have the currency chest, that are the non-currency chest bank branches, they are connected with the currency chest, or they are connected with the bank branch that has a currency chest to get the money. So this is known as linkage scheme. So RBI has a linkage scheme through which the non-currency chest bank branches are connected with the bank branch that has a currency chest. So this is the basic idea. Okay, so now we will understand the incentive. So I hope you have understood about the currency chest. Now moving forward, let's understand the incentives that are mentioned in the scheme. So all these incentives we are going to understand one by one with certain examples. So first of all, opening and operating currency chest in northeastern region. You know the northeastern region, the seven sisters are there. So opening and operating of currency chest in northeastern region and at inaccessible or hilly areas of Jammu and Kashmir and Ladakh Union territories. So it is said that if a bank branch is agreeing to open a currency chest in the northeastern region, or if they are opening a currency chest in the inaccessible or hilly areas of Jammu and Kashmir and Ladakh Union territories, so there will be certain incentive that will be given by the Reserve Bank of India in capacity of capital cost and revenue cost. Capital cost is like, let's say you are opening a building, you are establishing a building, you are like having some fixed asset. So capital cost is a one-time cost for the establishment of a building, for the establishment of the currency chest here. Okay, so capital cost, incentive for the capital cost. So let's say you are the bank, there is a bank branch that is agreeing to open a currency chest in the Jammu and Kashmir region, in the hilly area, in the inaccessible area. So a bank branch is opening a currency chest in such a area. So the capital cost, up to 100% of the capital expenditure that the bank branch has done to establish this currency chest. Let's say a new building has been established, a new office has been established for the currency chest. So if the bank branch has done a one-time capital expenditure for establishing the building or for establishing the fixed asset, so for that up to 100% of the capital expenditure is eligible for reimbursement from the Reserve Bank of India. So Reserve Bank of India will do 100% of the reimbursement for the capital cost that the bank branch has incurred, but there is a ceiling that up to the ceiling of 50 lakh rupees. That means if let's say you have done 40 lakh rupees of the capital expenditure, so 100% of the payment will be done to you, 100% of reimbursement will be done to you. So let's say a bank branch has opened a currency chest in the northeastern region. So the bank branch for opening the currency chest has spent 38 lakhs. So 100% of the reimbursement will be done to this bank branch, will be done to this bank. Okay, but now if let's say you have spent 55 lakh, 55 lakh for opening this currency chest. So up to 50 lakh only will be reimbursed to the bank branch. So this is the idea that capital cost up to 100% of capital expenditure, this is eligible for reimbursement. But there is a ceiling of 50 lakhs that you need to keep in mind. Okay, revenue cost, that is for the day-to-day operation of the currency chest, for the maintenance of the currency chest. So whatever expenditure that you are doing, that whatever is your revenue cost, 50% of the revenue expenditure is eligible for reimbursement for the first 5 years of currency chest operations. This is what the RBI has said, and RBI has also given an example that let's say that your capital cost that you have incurred, the capital cost that you have incurred to open a currency chest in either the northeastern region or in the region of Jammu and Kashmir and the Ladakh in the inaccessible or hilly areas. So if you have incurred the capital cost of 75 lakhs, so 100% of the capital cost will be reimbursed subject to a ceiling of 50 lakh. That means here only 50 lakhs will be reimbursed. Okay, because let's say you have done the capital cost to open the currency chest, you have done the capital cost of 75 lakhs. So there is a ceiling of 50 lakhs, that much will be reimbursed to the bank branch. Now revenue expenditure. So for the 5 years, for the first 5 years, there will be the reimbursement that will happen 50%. 50% of the revenue cost will be reimbursed to the bank branch. So if this is the revenue cost of the bank branch, so 50% of that will be reimbursed by the RBI. Okay, so this is the idea. Capital costs are one-time expenditure incurred for acquiring the building, fixed asset or infrastructure necessary for setting up the currency chest. So capital cost is a one-time cost for establishing the building for the currency chest or for establishing the infrastructure for the currency chest. Revenue expenditure or revenue cost is the day-to-day operational cost, or it is the operational or maintenance cost, okay, of the currency chest. So I hope this is clear. Any confusion here, anyone? So this is the first incentive that we have understood, that if a bank branch or if a bank is opening and operating the currency chest in the northeastern region or in the inaccessible or hilly areas of the Jammu and Kashmir and Ladakh Union Territories, then there will be the capital cost reimbursement and the revenue cost reimbursement that will happen to a certain extent. Okay. Now coming to the next point or the next incentive. So exchange of soiled notes or adjudication of mutilated notes. Let's say there are soiled notes. That means the note has become like scrunched up. It is a very bad note. It has got some, like, all the details are visible, but it has got some stains on it. Or let's say it is torn a little. You have both the parts, but it is torn a little. So let's say there are the soiled notes or there are the adjudication of the mutilated notes. Mutilated notes means it is completely torn and you have only a part of the note that is showing most of the details, but you have a part of the note only. So in this case, if there is the exchange that is happening of the soiled notes, or if there is adjudication of the mutilated notes, in this case, in the case of exchange of soiled notes, ₹2 per packet for exchange of soiled notes in the denomination of ₹50 and below. So basically the bank branches, they will get the incentive. They will get the incentive to collect the soiled notes. They will get the incentive to collect the soiled notes that they are transferring to the Reserve Bank of India. Okay. So basically bank branches do not do it single-handedly. So here, see the bank branches, is it visible? See the bank branches, they are connected with the currency chest. Okay. So basically the bank branches, they are connected with the currency chest. Let's say there is a bank branch that is a non-currency chest bank branch. So a simple bank branch, it is linked with the currency chest. So bank branches, they send the soiled notes to the currency chest, and the currency chest is then connected with the issue office of the Reserve Bank of India. Okay. So bank branches, they are not single-handedly sending the soiled notes to the RBI. The bank branches, through the currency chest that they are linked with, through that they are sending the soiled notes to the RBI. This is the basic idea, okay? So basically bank branches, they are getting incentive for collecting the soiled notes and sending it to the RBI. So rupees 2 per packet, they get the incentive of rupees 2 per packet for exchange of soiled notes in the denomination of rupees 50 and below, okay? So if the soiled notes are collected above the denomination of rupees 50, then there is no incentive. The incentive is only for collecting the soiled notes rupees 2 per packet. This is the incentive for collecting the soiled notes of denomination of rupees 50 and below. If there are the adjudication of mutilated notes, if the mutilated notes are collected, then rupees 2 per piece is the incentive that is given to the bank branches. This is the idea, okay? So here, first of all, let's take the example of soiled notes. So here you can see that 5,500 soiled notes are collected for rupees 10, and these are the soiled notes that are collected for different denomination, okay? Out of this, the packets are, one packet is of 100 notes. One packet is of 100 notes. So that means there are 55 packets of 10 rupees. There are 65 packets of rupees 20, 75 packets of rupees 50, and 50 packets of 100 rupees, okay? Total discrepancies, that means when the soil notes were being transferred, then it was seen that some of the notes were counterfeit notes, that were not the right notes, or that were the fake notes basically. So total discrepancies, that is shortage is there. The number that was shown, 5,500 notes, were the number that was shown by the bank branch, but actually the RBI has only received 5,490 notes. So 10 notes are in shortage, or let's say there are some counterfeit notes that are there, okay? So 110 notes are the total discrepancy. Either there is the shortage that has happened, or there is the counterfeit notes or mutilated notes that are shown in the soiled notes, okay? So there are some discrepancies. After deducting these discrepancies, this is the final number that the RBI has received, okay? So bank branches, through the currency chest, they send their soiled notes to the RBI issue office. The issue office check that actually they have received the soiled notes or not. After checking, they make the packets. So 53 packets, 62 packets, 74 packets. So then the incentive is given. Rupees 2 per packet is the incentive that is given. And for up to, like, the incentive is only given for the notes of denomination of rupees 50 and below. For above rupees 50, there is no incentive that is given for the soiled notes. Any confusion here? Now coming to the mutilated notes. In case of the mutilated notes, let's say these are the mutilated notes that were notified by the bank branches that okay, they have received these many of the mutilated notes. Out of this, let's say there is some discrepancy that has happened in the shortage. There is some shortage or the counterfeit notes. So this is the discrepancy. And once the discrepancy is deleted, is deducted out, these are the actual number of the mutilated notes that the RBI has received, that the issue office of RBI has received, and according to the notes, there is the incentive that is given to the bank branches. Any confusion here, anyone? Now the next incentive is distribution of coins. If the bank branches are distributing the coins, then also they get certain incentive, okay? So rupees 65 per bag for distribution of coins. So per bag means 5,000 pieces of 50 paise coins. So 50 paise coins, if the bank branches are distributing 50 paise coins, so one bag will be considered of 5,000 pieces. While if the bank is distributing the rupee 1, 2 or 5 rupee coins, then a single bag of coins will be considered of 2,500 pieces. And if the bank is distributing rupees 10 or 20 denomination coins, then a single bag of coins will be considered of 2,000 pieces. So this is the criteria for considering the bag. So rupees 65 per bag for the distribution of coins. This is the incentive that the bank branches receive. Now an additional incentive of rupees 10. So rupees 65 per bag for the distribution of coins. Let's say a bank branch is distributing a bag of coins of rupees 1, let's say. So they will get the incentive of rupees 65. But let's say that a bank branch is distributing the coins in the rural area or in the semi-urban areas. So in this case, a additional incentive of rupees 10 is given. That means in total, rupees 75 is the incentive that is given per bag, that is per bag of the coin that is distributed in the rural or semi-urban area. So basically, if a bank branch is distributing the coins, they will get the incentive of rupees 65 per bag for distribution of coins. But if the bank branch is distributing the coins in the rural or semi-urban areas, then they will get the incentive of rupees 75 per bag of coin. So remember that for the rural and semi-urban area, there is the additional incentive of rupees 10 that is allowed. Okay, any confusion here? So I hope this is very much clear. So you can see that coin distribution in the urban area, incentive amount for 3 bags will be 195, that is at the rate 65 per bag. But if we are talking about the distribution of coins in the rural or semi-urban area, so in this, the incentive amount for 3 bags will be at the rate rupees 75 per bag. So this is the extra, 10 rupees is the extra, an additional incentive of rupees 10 per bag is the extra incentive that is given. Okay. This is not submitting, this is distributing. If the bank branch is distributing the coins, okay, if the bank branch is distributing the coins, in this case, the bank branch get the incentive. Here the bank branch is actually distributing the new coins, okay. This is the idea. So now, denomination of coin, let's say rupees 2. So total pieces that is deposited by the customers is 4,000, while total pieces that is withdrawn by the customers is 2,500. So total bags that is deposited, the total bags that are deposited is if we are talking about 2 rupees, so a bag is of 2,500 pieces. So total bags that are deposited is 1.6. Total bags that are withdrawn is 1. So in total, net standard bags that is withdrawn or that is given by the customers, okay, that is given by the bank branches to the customers is negative 0.6. While here the total pieces of 5 rupees that is deposited is 0 by the customers, while the withdrawn is 7,500. So that means 3 bags are withdrawn and 3 bags are distributed. 3 bags of coins are distributed by the bank branches to the public. So here these are the 3 bags, okay. Now here 10 rupees, in the case of 10 rupees, 2,000 total pieces are deposited. So that means 1 bag is deposited by the public, while 2 bags are withdrawn by the public. So in total, how many bags are distributed by the bank branches? So in total, the distribution of or the withdrawn of the coins that has happened is 3.4. This is the total. This is the total coins that are withdrawn and that are distributed by the bank branches. Okay. So here the bags that will be counted for the incentive will be 3. Okay. Clear? I will take the extra queries at the end of the session. If you have any query regarding the topic, that you can ask right now, but the extra questions will be taken at the end of the session. Okay. So I hope this is clear. Any question, anyone? The total pieces of coins that are deposited means customers are depositing the coins. Withdrawn means that customers are taking out the coins and the bank branches are distributing the coins. So here we have to see that how much is the net distribution of coins that is being done by the bank. Okay. And then on the net distribution of coins, the incentive will be given. So this is the idea. Total pieces withdrawn has to be deducted from the total pieces that is deposited, and then there is the incentive that is taken. So now other operational instructions on payment of performance based incentive. So basically the incentive shall be paid on the soil notes actually received in the issue office of the RBI. This I have shown in the example also, that let's say the soil notes, the bank branch has said that we have given 5,500 soil notes, but RBI will see that how much the RBI has received the soil notes from the bank branches. So RBI is saying that we have received the soil notes only 5,390. So incentive will be given on only those soil notes that is actually received by the RBI, and that is the RBI is notifying. Okay. So incentive shall be paid on the soil notes actually received in the issue office of the RBI. Incentive shall be paid in respect of the adjudicated notes received along with the soil notes remittances or sent separately by registered or insured post in a sealed cover to the RBI. That means in case of mutilated notes, the incentive will be given, okay, separately. So this is the idea. The incentive for distribution of coins shall be paid on the basis of net withdrawal from currency chest. So basically, total deposits of the coins minus total withdrawal of the coins. So let's say the total withdrawal of coins is 3 bags minus total deposit of the coins is 2 bags. So that means incentive will be given on only 1 bag. So this is the net withdrawal of the coins. That is total withdrawals minus the total deposits. So net withdrawal of coins, on that the incentive will be given, and incentive is rupees 65 per bag in case of the rupees 65 per bag in case of the urban areas, distribution of coins in urban areas, rupees 75 per bag in case of the distribution of coins in the rural areas. Okay, so this is the idea. Now currency chest branch shall pass on the incentive to the linked branches for the soiled notes deposited or coins distributed, mutilated notes objecticated by them on pro rata basis. That means the bank branches, they are connected to the currency chest. Okay, so currency chest branch shall pass on. So currency chest branch, first of all, it is linked to the different bank branches, and different bank branches are sending the soiled notes to the currency chest branch. Currency chest branch then will pass on this soiled notes to the RBI, and the incentive that RBI will give to the currency chest branch, that has to be distributed to the bank branches. So basically, bank branches are receiving the soiled notes or mutilated notes. Bank branches will transfer it to currency chest, and then from the currency chest it will be transferred to the issue office of the RBI. Then RBI will give incentive to the currency chest, that will have to be transferred to the bank branch. So basically, the bank branches are not directly linked with the RBI. They are connected with the RBI for transferring the soiled notes through the currency chest. So last point is the distribution of coins. So basically, the distribution of coins shall be verified by RBI. The distribution of coins shall be verified by the RBI regional offices through inspection of currency chest or incognito visit to the branches. So actually, the distribution of coins is happening or not. The total withdrawn coins, that is shown, and the net withdrawal, that is shown, that is total withdrawal minus total deposits. So is this the correct numbers that are shown? So that has to be checked by the regional offices through inspection of the currency chest or incognito visit to the branches. Okay, so this is the idea. Now here one thing is missing. Let me just check. Okay. So the last incentive that we have to discuss is the cash deposit by non-chest branches under linkage scheme with currency chest. So basically, what happens that the cash deposit, the non-chest branches, there are the non-chest branches. These non-chest branches, they do not have the currency chest. They get the banknotes, they get the coins from the currency chest. That I hope you know. So basically, service charge to be levied. The service charge will be levied by the currency chest on the non-chest branches, because the currency chest is providing its services to the non-chest branches. The currency chest is transferring the banknotes and the coins that the non-chest branches want, right? So the non-chest branches are getting the services from the currency chest. So the service charge will be levied by the currency chest on the non-chest branches, so that like if the non-chest branches are taking the banknotes or coins, so currency chest will charge some service charge. So large modern currency chest, if the currency chest are a very large modern currency chest, they will charge rupees 8 per 100 pieces. Okay, so this is the currency, this is the service charge that will be taken by large modern currency chest. The other currency chest will take rupees 5 per 100 pieces. So this is the service charge that will be taken. So the large modern currency chest will take the service charge of rupees 8. The other currency chest will take the service charge of rupees 5. Any confusion here? So these are the incentives that we have discussed, and I hope all of these points are very much clear to you. And this is the first question. I hope you will be easily able to answer this question. Okay, this is the first question in which you have to tell me that which of the following statement is or are correct in regards to the incentive under the scheme. Okay, now before showing you the second question, let me show you that if like many of the students ask that how they can do the answer writing practice. So for that we have released a perspective 360-degree series that is taken by Jaskaran sir. So Jaskaran sir takes the perspective 360-degree series on Monday, Wednesday and Friday at 5 p.m. where he tells you the art of writing the answer, as well as he gives you the question for which you write the answers in the comment section of the series, and the answers are also evaluated free of cost by the team. So you can write the answers, you can know that how the answers can be written, even the recent topics like on different reports and different topics, on that you can know that how to write the answers. Okay, so this is the idea, as well as your answers will get evaluated free of cost. So now this is the first question that I hope you will be able to answer, and this is the second question. Do try to answer this question also. Very easy question. Directly the question is regarding the service charge that will be levied by the currency chest, by the large modern currency chest or by the other currency chest. Okay, so this is it. Thank you very much for joining the session. Was everything clear to you? Do tell me in the comment section if there is any query you have, and do give me the right answer of the homework questions. Okay, मैम PSL टारगेट रूरल कोऑपरेटिव बैंक्स को क्यों नहीं दी जाती? Like regional rural banks, they do get the targets, right? And urban cooperative banks also do get the targets. For the rural cooperative banks, maybe they are very small in nature and they are working in the rural areas, so it is not required directly because they are directly working in the rural areas. Okay, Anish. So do give the right answer. And the incentives we have discussed, these are the 4 incentives that we have discussed: opening and operating of currency chest in the particular area. So for that there is the incentive in the capital cost and reimbursement of the revenue cost to a certain extent. Exchange of soil notes or mutilated notes. So for that there is the, like the bank branches, if they are transferring the soil notes or mutilated notes to the RBI offices through the currency chest, so they get certain incentive. Distribution of coins, if the bank branches are distributing the coins, there is the net withdrawal that is seen, that how much the net withdrawal is happening of the coins, how much net withdrawal of the coins is happening from the currency chest from the bank branches. So distribution of coins, for that the bank branches get the incentive. And for the like there is the service charge that has been mentioned, that is taken by currency chest from the non-chest branches. All of this we have discussed in detail. So this is it. Thank you so much for joining the session. If there is any confusion, any problem you have, you can write in the comment section below, and do give me the right answer of the homework questions. Thank you everyone.